Yes, good morning, warriors. We are going to continue with our discussion on the first chapter. Yes, we're technically completing our first chapter of today, but yes, before we do that, let's do a quick revision of what and all we have discussed till now. Yes, we have started understanding when it comes to Income Tax Act, there are some things to be kept in mind. One is that we have something called Article number 265. Article number 265 come and confirms that you cannot be levying or collecting taxes except by an authority of law. You have Article number 246, which confirms the fact that any law can only be created by an parliament, state, central, or union list. Yes, then we started understanding when it comes to law and an act, the law is bigger. Law is comprising of, help karo. Law is comprising of act, rules, circulars, notifications, case laws. People, which one is binding on department? Both are binding on department. When it comes to circulars and notifications, both are binding on department. Which one is binding only on department? Read the lines very carefully. When I say binding on department, it is both. When I say only binding, then it is circulars. That is what we have discussed of. Yes. Then we started understanding when it comes to laws, people, you have to create an act. Act goes through a bill. Bill becomes an act by passing through Lok Sabha, Rajya Sabha, President assent of. Yes, at any point of time, if there is any mistakes in the act and you want to make some changes at the last minute, you can introduce a ordinance which has to be retrospectively ratified by the parliament at a later stages. Yes, then we started understanding the fact that when it comes to act has a few things to be kept in mind. One is starting with sections, subsections, clause, subclause, item, sub-item. When you decide to have a subsection, when the items are linked to each other. When do you have to decide a clause? When you have no items linked to each other. Yes, apart from that, you have something called provisos, which is an exception to a provision. Then you have explanations, which clarifies a definition or gives deeming fictions. Then you have something called non-obstante clauses, which is an exception to the main section itself. I want an exception to the main section, I want an exception to the chapter, or I want an exception to an act. Then we have something called subject to conditions, which is always giving you inferiority guidelines. Yes. Then we started discussing about what is looking as Income Tax Act. In Income Tax Act, we said there is section 1, which talks about title, extent, and commencement. Section 2 talks about definitions. Whenever you have a definition, people, definition can be of 3 types. Type number 1, inclusive. Type number 2, exclusive. Type number 3, exhaustive. If you want to place definitions, the order of placement is very critical. If you place it inside a section, it applies to the section. If you don't want it in the section, it applies to section 2. It applies to section 2. If you don't have it in section 2, it goes to general clauses. Doesn't sit in general clauses, you go to law dictionaries. If it is not sitting there also, it is customary practices. That is how we ended our discussion of. Then we started with the main important discussion about section 4, which talked about charging section of income tax, which said income tax will be levied on the total income which is earned by a person in the previous year, assessable at rates in force in the assessment year. We started understanding what do you mean by a person, where we said person means, person includes individuals, HUF, firms, companies, AOPs, BOIs, local authorities, AJP. Very good. Yes, people, I feel really bad that I gave you questions yesterday and I did not answer it. Do you have any answers for me? No? Questions on dog is an person. नहीं पढ़ क्या है? I gave you questions if I remember. Yes. When you say the word includes means whatever I've given to you, something similar can be added in. Yes, you cannot have any beyond scope of it. You might have learned something in Companies Act which calls as adjustum generis. Adjustum generis means what? If I have a specific item, the generic will take characteristics from the specific item. So when I use the word person includes, I'm giving you these definitions and something related also becomes a part of it. Yes, a valid question, definitely valid question. Now, if I have to give you the answers of the previous conversation, people, when you have a robot, is it going to be called as a person? Answer is no. Answer is no. When you have an animal, is it going to be called a person? Answer is no. When you have a baby, is it going to be called a person? Answer is yes. Answer is yes. Why does it happen? Because the definition of individual is defined in such a way. While individual is not part of Income Tax Act, a general understanding of individual means a person should have a sixth sense. A person should have a sixth sense. A dog or a robot as of now does not have a sixth sense. An individual as a baby may have a sixth sense. Yes, development stages, but definitely valid enough. Yes, which is why a robot and a dog do not sit into person's definition. They are taken care by their owners. They're taken care by their owners. On the contrary, the baby is sitting in a person definition. So baby can be taxable. However, we have clubbing conditions. We have clubbing conditions. Now, one mistake which a lot of students end up making is they say, Rahul, the moment there is a baby, it is always for the parents. That's not the case. Understand, whenever it's a minor child also, there are exception to the rules. Yes, if you have done anything by way of special talent, skill, manual labor, or you are a disabled child, in that case, it becomes taxable for you only, which means in a child case also, there are incomes which can become taxable for the child. Yes, a very beautiful example would be, it's not supposed to happen, but imagine a child was born handicapped. The moment the child was born handicapped, any money which is received by the child from day one will be taxable for the child, cannot be taxable for the parent, which means as a minor also you will be taxable only for your incomes. No one else can take ownership of those. Yes, so those are all the conditions which you need to keep in mind. Are we clear? Any other questions that I gave you? No, the other one, in the person definition itself. I remember giving you a case where two people are coming together to make a lemonade stand. Yes, incomes which is earned by the lemonade stand will be taxable for both of them individually. Yes, you do not end up creating an AOP or BOI just because you come together. That's not how the understanding is. You need to have a legal valid registration for it. Yes, which means if I go up, I open up a lemonade stand and I declare to income tax department that yes, we are acting in the capacity of a BOI, then yes, you can tax it in the form of BOI. But just because two people have come together and run a business together does not automatically make it a AOP or a BOI. You will still be taxable in your individual capacity. Yes, there is a Supreme Court judgment on this. When we do AOP BOI, I'll discuss that with you. The concept which comes and says that just because two people come together does not automatically make something an AOP or a BOI. You need a legal valid registration, or it should be a force of law. Government should have forced you upon this to make it a valid registration. Until such time, all incomes earned are taxable in individual capacities. You will split the incomes accordingly. What is the basis will be always agreed upon, but nevertheless you will have to do it in that logic only. Yes, now if you come and tell me, Rahul, lemonade stand, I have not even decided what to split, in that case you don't have an option. It becomes an BOI. Then it becomes a BOI, because if you don't give a proper split, you have no other option. It will be taxable as BOI, because BOI has a condition of taxing it at, any guesses? No, it is going to become taxable at MMR. Yes, if an AOP does not declare the share of profit ratio, it will automatically become taxable at MMR, which means the highest tax rates of India. We will end up taxing it to that extent, which is why anyone who enters into these transactions, day one itself, they will agree on the share of profits. They don't go with that risk. Making sense? Yes. Any other questions that I give you? No. Person definition related. Not that I remember of. Yes, so these are the three questions which I gave you, and this is what the answer is. Yes, last question which I'm trying to ask you people, it's a case law which we'll discuss later on also, but nevertheless, imagine a case there is a company and the company is planning to get liquidated. Automatically, court will appoint a liquidator. Yes, now the responsibility of selling all the assets is with liquidator. He's going to sell it in his own capacity. He's going to sell it in his own capacity. My question is very simple. The liquidator has sold the assets of the company, made some profits obviously. Yes, this profits will be taxable for the companies in liquidation, cannot be taxed, unfortunately. The moment your liquidation proceeding starts, you cannot be taxable as companies. Taxability will be for whom? Who will pay the tax on these profits? Why would promoter pay the tax? What? No, you're not understanding my question. People, company is shutting down. The assets of the company are going to be sold in the open market. The profit which you're going to get from selling the share assets in the open market, on that who's going to pay tax? The surplus is okay, but before you distribute the surplus, don't you have to pay tax first? You get my question? The profit which is coming from sale of the assets in the open market to generate money to give back to my shareholders, that money is obviously an income. Someone has to pay tax. Who will pay tax? No, why will you have 5,000 shareholders? Who will pay tax? No. People, obviously, who's selling the assets? So who will pay tax? Liquidator only will pay tax. The only question is, liquidator will pay tax in what capacity? Can a liquidator pay tax in company's capacity? No, because The company is in liquidation proceedings. They don't have the authority to do it. Can a liquidator pay the tax in his personal capacity as an individual? No, because he never generated this profit in his individual capacity. It cannot be taxable at slab rates. Yes or no? Yes. Here is where a litigation went on to Supreme Court, and Supreme Court has come and confirmed saying when a liquidator makes profits on sale of an assets, he will tax it in liquidator's capacity as an AJP. As an AJP, they will have to take a new status of an AJP and they will have to pay tax under AJP capacity. So which means the profit will be as if it is accrued by a AJP and they will pay tax in their own personal capacity on this, after which whatever surplus is there will be given off to the shareholders. Yes. Sorry. They will get one PAN number for their life and that PAN number will be used for all my liquidation proceedings. Yes, that is how it will work out. Yes, so that is how it is, people. Liquid, and that is one question which I always used to come and ask people. The fact about when you have any kind of liquidation proceedings going on, yes, who should be paying the tax is the big question which had come up. And therefore, income tax came and confirmed it is going to be liquidator, but not in his capacity, neither in his company's capacity, but rather in AJP's capacity, Are we making sense? Yes, let's keep that thought in mind. Any doubts? Good to go? Yes, perfect. So that is what we have discussed of when it comes to the person definition. After which we proceeded forward and we started understanding a few things, talking about what is previous year, talking about what is assessment year. Yes, we discussed about what is called as a previous year and what is called as an assessment year. We told that previous year is the year in which you earn your income, and assessment year is a year in which you pay your taxes. In an income tax model, a previous year can be for a period less than or equal to 12 months, but an assessment year will always be for a period of 12 months mandatory. It can be as low as 1 day when it comes to previous year also, it doesn't matter. Then we ended up our discussion to come and say that when it comes to previous year, it does not matter what Companies Act comes and says. Even if you are post January, you will still be preparing books for that respective period and filing off your returns. In case you are a company which is after January, still not getting audit, it does not really matter. Your return will still be processed on 31st October. That is what we discussed in the previous classes, correct? Yes. Finally, we moved on to the last topic, which was total income. In total income, we started to understand total income is a compilation of 5 heads of income. But before we went to total income, we understood what is an income as a definition. We spoke about the fact that when it comes to income, income is nothing but revenue minus, very good, it's revenue minus allowable expenses. It's not revenue minus all expenses, it is revenue minus allowable expenses in consideration. Yes, income tax comes and clarifies that when it comes to income, income can be in the form of cash or it can be in the form of kind. It can be legal, it can be illegal, it can be regular, it can be one time, it does not matter. As long as I clarify something as income, it is always taxable. As long as I clarify it as an income, it is always taxable. Where will I clarify it as an income? Section 224. Section 224 is where I'm going to clarify something as an income, and that is where something is going to be taxable. Yes. Now, like I clarified it earlier also, people, when it comes to income definition of 224, they do not talk about expenses. They only talk about revenues. Yes. 224 talks about revenues. Expenses are provided in respective chapters and sections. Yes, that is where you'll find all the expenses of for you to consider of. So please be very careful that when you read 224, you will not find any expenses in it. They will simply talk about the revenue part of it. To claim expenses, you need to go to the respective chapters of. Yes. Finally, we ended our discussion yesterday by talking about what is called as application of income and diversion of income by overriding title. Very good. Yes, two things we discuss, people. One is called application of income, one is called diversion of income by overriding title. Application of income means power is with me. Power is with me. As an assessee, I have the power to decide what to do with the money, in which case income will continue to be taxable in assessee's hands. On the contrary, diversion of income means money which is never eligible to me. Before even I had the opportunity to earn the income, this was already titled off to someone else. The ownership of this money was never with me. It was passed on to someone else, which means decision was never taken by me. It was given to me automatically by considering this as a model. Yes, that is when we talk about diversion of income by overriding title, in which case we will not be taxable in the hands of assessee. It will be taxable in the hands of the other person. It will be taxable in the hands of the other person. Yes or no? Yes, that is what we discussed of. Give me a second, people. Sorry. Yes. So application of income and diversion of income. Application of income is going to be taxable for the assessee irrespective of whether he receives the money or not. Diversion of income is not going to be taxable for the assessee even if he ends up receiving the money of. That is what it is. Yes. In a question, how do we identify whether it is application or diversion? You will check the question and see whether the choice to transfer the income was with this person or was it already given to him before the transaction took place. Based on that is what your discussion is going to end up. Are we clear? Yes, very good. People, do you have your sticky notes with you? If you can take one sticky note out, let's write some notes on the application of income part. Book one. Yes, people, you have this page called as income definition. I think it's page number 3. Somewhere in page number 3, you can put a small sticky note with me. Let's put a small sticky note with me. We're going to put the heading as application of income. And diversion of income. Application of income and diversion of income. People, tell me, what is application of income? What is application of income? Choice to transfer income is with. Very good. Application of income. Choice to transfer income is with assessee. Choice to transfer income is with assessee. When it comes to diversion of income, what is it? Transfer of income took place before the discussion took place. Yes, diversion of income is transfer of income agreed well before assessee was involved. Yes, transfer of income agreed well before the assessee was involved. People, in application of income, who's going to be taxable? Assessee taxable. Even if he did not receive the income. Assessee taxable even if he did not receive the income. Hey, in diversion of income, who's taxable? Imagine this example which I told you, people. There are 4 child. Yes, there are 4 children and 4 children are earning the full income, but the money has to go to the mother. Now, whether the money goes to the mother or not, who's taxable? Mother is taxable. Apo, is it required that the money should be received by the mother? No. Which means here who's going to be taxable? The official legal owner of the income. Yes. So, legal owner of the income is taxable. Recipient is irrelevant. The recipient is irrelevant. Yes. कर दो finish. Yes, for those who are done, can you take out a solutions guide? Let's see some 2 case law questions. Let's see if you're able to answer. People, whenever we're referring solutions guide, my only small request. If you have a pencil, amazing. If you don't have a pencil, please carry a highlighter. Yes, we're going to look at the whole question. We're discussing it together and then we'll just mark some 2-3 words so that you understand the question in a single shot. Yes, we don't waste too much time on those kind of things. Yes, so pencil hai to pencil, nahi to highlighter is good enough. Ready to go? Yes. निकाल दो. Solutions guide, question number 1. Chapter 1, page number, question number 1. Chapter 1, question number 1. Shall we? Yes. Let's read the question together. Question says, Mr. Bhargava is a leading advocate on a corporate law matter, decided to reduce his practice and to accept briefly only for paying taxes and making charities with the fees received on such brief. I am a lawyer and I've decided that I want to reduce my practice by collecting money only to the extent I have to pay tax. Everything else I will donate to charity. In a particular case, he has agreed to appear to defend one company in the Supreme Court on the condition that he would be provided with 5 lakh rupees for a public charitable trust that he would create. So I went to a Supreme Court judgment case and I said, whatever money I'm going to receive, I need to receive 5 crores, but nothing should come to me. Give it off to charitable trust. He defended the company and was paid the sum by the company. He has created a trust of that sum by executing a trust deed. Decide whether the amount received by Bhargava is accessible in his hands as income from profession. Who is going to be taxable is the question. Who's going to be taxable? Is the trust or the Bhargava? Bhargava or trust? Bhargava, because it's an application of income. Decision to transfer was made by Mr. Bhargava. Agreed, not agreed? Yes. Let's read people and we are going to only mark whatever is important. Who made the choice? Because application of income mein, the person who's receiving is not making the choice. Who's making the choice? He's only making the choice. He's making the choice to come and say that for me, this will not be given to me. It should be given to someone else. Who's the actual person who's making the choice? Bhargava. Who should be taxable? Bhargava. Look at it from trust perspective. When the trust was created, what was trust known? Trust was informed that I will not be receiving this money itself because, I will be receiving the money only when Bhargava gives, which means in the hands of trust, it was a diversion. In the hands of trust, it was a diversion because trust will come and say, I was never even making the choice. Who made the choice? Bhargava made the choice. So diversion of income nale, trust will say taxable for Bhargava. Application of income nale, Bhargava will say Bhargava is taxable. Make sense? Yes? Perfect. Let's read it together. Let's mark some important things. In the present case, the trust was created by Bhargava himself out of his professional income. Yes? So who made the trust? It was made by Bhargava. Bhargava made this trust. The client did not create the trust. The client did not impose any obligations in the nature of the trust which is binding on Bhargava. Thus, there is no diversion of income to the trust before it became professional income in the hands of Bhargava. This case is one of application of professional income. Here is a case of application of professional income and not diversion of income. Therefore, Mr. Bhargava is chargeable to tax. Therefore, Mr. Bhargava is chargeable to tax. 4 keywords for you people and that is what the answer is. Yes, if you read these 4 keywords, I am assuming you already understood what is happening. It is himself out of his professional income, did not impose any obligation by the client. Therefore, there is no diversion of income, but rather application of income taxable for Bhargava. Yes, what I am trying to clarify to you people is when it comes to theoretical questions in exam, you are only expected to get like 1 or 2 theoretical questions. Question number 5, question number 6. Yes, now in question number 5 and question number 6, going and telling who is taxable, Bhargava. For a 4-mark question, you will end up getting 0, absolutely 0. Yes, every time you read a provision and write some theory, it has to have a 4-step process. Step number 1, provisions of the case. Step number 2, facts of the case. Step number 3, analysis of your case. And step number 4, conclusion of your case. Notice the 4 lines. First line is all your provision. He is not doing it out of his professional income. Second line comes and says he does not impose any obligations. Step number 3 comes and says this will be an application of income. That is my conclusion. And step number 3 is my analysis because it is application of income. And step number 4 says it is taxable for Bhargava, which is my conclusion. Yes. So one thing very clear, people, going forward, if it's a theoretical question, you come to me and tell Rahul Bhargava, I will give you 0 marks. Yes, which means every time we discuss going forward, you are going to give me 4 steps. You're going to give me 4 steps. Can we do that? Yes, perfect. Question number 2. Look at question number 2. It says, XYZ Limited has taken over the running business of a sole proprietor by a sale deed. I have taken over someone else's business by a sale deed. As per the sale deed, XYZ Limited undertook to pay overriding charges of 15,000 per annum to the wife of the sole proprietor in addition to the sale consideration. Which means when I executed the deed itself, it was confirmed to me that I will only get this deed when I pay 15,000 to the wife of the owner. The sale deed also specifically mentioned that the amount was charged on the net profits of XYZ Limited, who had accepted his obligation as a condition for the purchase of the going concern. I have mandatory this to be done. If I don't do it, I will not be able to execute the deed. Which means I have made a promise to him that I will only take this property on a sale when I give you 15,000 per annum as overriding charges. Is the payment of overriding charges to the wife of sole proprietor in the nature of diversion of income or application of income? This is a diversion of income. Why? Because I did not have a choice. It was made by the sole proprietor. Unless the sole proprietor does not give me an option, I will not be able to claim this money itself. Which means this money from the first day itself became the ownership of the wife. Will be taxable in the hands of wife. Will not be taxable for XYZ Limited. Agreed? Yes? Good. The facts of the case are similar to Allahabad High Court decision in the case of Jit and Pal X-Rays Private Limited versus CIT. The High Court observed that overriding charges which has been created in the favor of the wife of the sole proprietor was an integral part of the sale deed by which the going concern was transferred. I could not do this without paying the overriding charges. It became an integral component for me. The obligation therefore was attached to the very source of income. I had to understand that this was part of my many source of income. I cannot do this transaction itself without that taking place. The sale deed also specifically mentioned that the amount in question was charged on the net profits of the company, and the assessee company has accepted the obligation as a consideration of purchase. Hence, it is clearly a case of diversion of income by an overriding charge. It's a clear case of diversion of income by an overriding charge. Yes, once you get the facts, people, all questions are going to make sense. It's not a rocket science here. You just have to understand this carefully. Make sense? Yes, perfect. Let's try one more. Question number 3. It says, MKG Agency is a partnership firm which is consisting of Mr. Mohan and 3 major sons. I have 4 partners. The partnership deed has provided that after the death of Mr. Mohan, the business shall be continued by the sons, which means he'll pass on his legacy. Subject to the condition that the firm will mandatorily have to pay 20% of the profits to the mother, who is Lakshmi. So they have now confirmed that after father dies, a new partnership will be created which will only have the 3 sons, but in that partnership mandatorily 20% will go away to my wife. Mr. Mohan died in March 25. In 25-26, the reconstituted firm had paid 1 lakh rupees to Lakshmi and claimed the amount as a deduction from its income. Examine the correctness of the claim. Is the firm correct here? Answer is very good. Very validly yes, because when the new firm was created, the new firm was already obligated enough to pay this money to Lakshmi, which means the firm had no choice. The choice was made by the will itself. Which means the firm cannot claim that 1 lakh rupee becomes taxable for Lakshmi. Yes. Now here is a different way of answering this, people. Look at the last line. Last line says discuss the correctness of the firm, which means your conclusion will not be on just like saying it is diversion of income. Your conclusion should confirm whether the person is valid or invalid. Yes or no? Yes. A very polite way of writing it is, people, by concluding saying this is a diversion of income and therefore the contention of the firm is valid. That is what we use. We do not use the word correct and wrong, people. Those are rude layman statements. We use the word valid and invalid. Are we clear? Yes. So this is also one other English which we are going to write down when we write our notes off. Yes. So always you will conclude by saying therefore the contentions of the firm is valid. That is how you're going to conclude this off. Yes or no? Yes. Very well. It says the issues raised in the problem is a concept of diversion of income by overriding title, which is recognized in income tax law. In the instant case, the amount being 20% gets diverted at source by the charge created in her favor. Such income does not reach the assessee firm. Rather, such income gets diverted to the other person as such other person has a better title on such income than the title of the assessee. Who's the assessee here? Very good. The firm is the assessee in this case. The assessee, the firm might have received the said amount, but it was so received on or behalf of Mrs. Lakshmi, who possesses the overriding title. Therefore, the amount paid to the mother should be excluded from the income of the firm. Yes, this is my conclusion line. How will I conclude this line? By saying the contentions of the firm is very well. That is what the final conclusion should be. Yes, it may be missing out from your ICI study material format, people, but let's write it down as well. Therefore, the contention of the firm is valid. Therefore, the contention of the firm is valid. Contention of the firm is valid. Make sense? Make sense? Beautiful. This is what we call as application of income and diversion of income by overriding title. Yes, it has unfortunately never been tested at CA final level, but it's a very, very good concept which you should keep in mind, because you never know when an MCQ can change off suddenly. Yes, everyone has this weird assumption in CA final level that chapter number 1, which is basics of income tax, is not relevant. Yes, I don't deny it. Even I agree to the fact that it's not very critical, but this is ICI, people. Yes, May 2025 was one of the most beautiful examples to come and clarify. If you think something is a choice, there will not be any choice. There will not be any choice. They started asking questions from that chapters which you did not even imagine will come. Yes, funny thing, this September exam, CA final exams, for the first time in life, I saw clubbing of income coming in CA final level. Yes, clubbing of income is a chapter which we don't even discuss, because we tell you have already understood it at inter level. Yes, MCQ question, 4 marks clubbing of income question came for CA final level. That is how ugly it was. Yes, this is ICI way of coming and saying don't skip things, only decide what is important and not important. Yes, which is why I'm trying to mark a few things here and there, people, just in case you be comfortable ki haan nahi bhi pada to at least ek baar refer kar liya to things are easier to that extent. Yes, yes, perfect. For me to conclude this chapter off is what we are discussing, the last thing. People, we now understood what is an income. We now understood what is an income, where income is application of income or diversion of income by overriding title. Yes or no? Yes, that brings me to the last discussion with you. Understand this carefully. When I told about income, I told you income can be of any types. Income can either be legal or illegal, once or regular, cash or kind. Yes, this is a general understanding from income tax. However, the definition of section 224 has been designed in a weird fashion. The designing of section 224 is done in such a way where 224 comes and clarifies income includes and a list of items. Now, if you notice a list of items, what would happen is item number 1 itself will come and say any profits or gains earned from business. Any profits or gains earned from business, which means they say the moment you're running a business, whatever profits you make is fully taxable. At the same time, people, every item which we discuss in income definition, most of the items are revenue items, which itself gave a clarification from income tax department saying, boss, when it comes to income tax, if something is a revenue receipt, what? If something is a revenue receipt, it is always taxable. It is always taxable. But if something is a capital receipt, then it may or may not be taxable. It may or may not be taxable. Now, how do you decide whether it is may or may not be taxable? Very simple. The definition should come and tell you. Which definition? Which definition? 224. 224 should come and clarify, which basically means that, people, the moment you see something as a revenue receipt, the automatic conclusion is it is taxable. But when you see something as a capital receipt, you will ask yourself a question: is it sitting in section 224? Is it part of the deeming fiction? If yes, then it is taxable. If not, then it is not taxable. If not, then it is not taxable. Now, this is a very, very important discussion, people, because in a practical scenario, when you don't end up getting money on a regular basis, if it's a once in a while transaction, 99.99% a person will say it is exempt. A person will say it is exempt. The moment the person says it is exempt, I will not even end up paying tax, which means as a person, would you like to declare more capital receipt or more revenue receipt? As a person, would you like to declare more capital receipt or more revenue receipt? You would like to declare more capital receipt. You declare more capital receipt, you will come and say it is not sitting in 224, it is fully exempt. Agreed, not agreed? Yes. One of the most beautiful cases I've seen in my market study people, there was a case which is not there in your syllabus right now, it was there earlier, a case called as Mahindra and Mahindra. A case called as Mahindra and Mahindra. Anyone who has heard this case law? No? No? Very good. Mahindra and Mahindra case law was like this. There was a company called Mahindra and Mahindra which wanted to buy some assets. So what happened is Mahindra and Mahindra went to a company and they said, I want to buy some assets from you. Let's say rupees 1 crore. For this 1 crore, what Mahindra and Mahindra needs to do? Pay money. Pay money. Agreed, not agreed? Yes. Mahindra and Mahindra said, I don't have money. I don't have money, which means I'll have to take a loan. Funny thing, what happened? Mahindra and Mahindra went to a sister concern. Yes, let's say M&M some US. I don't know what example it is. Yes, let's say one M&M US. It went to its own sister concern and said, I want to buy a machinery. I need 1 crore of loan. Yes. So what M&M US did? They gave this money to India. India went and paid it to company, got the asset. Now people, asset has come in the name of Mahindra and Mahindra India, which means eligible for claiming depreciation. Agreed, not agreed? Yes. Which means this company is now claiming expenses of. At the same time, Mahindra and Mahindra India needs to pay back loan. This loan went on for about 5 to 6 years, people. After 6 years, US guy came and said, you know what? Rakle, I don't want the money back. It was already decided on day one itself, they don't want it back. Yes. But 6 years later, they come and say, I don't want the money back. Now, because they don't want the money back, what happens? It becomes a waiver. Now, people think from US perspective. From a US perspective, this is a waiver. So he went to his US statement and he declared a write-off. He went and said, I am not going to receive the money. It's a waiver from my side. It's an expense, which means US claimed expense. It came to India. In India, he came and said, it's a waiver of a loan. Regular transaction once in a while. Revenue receipt, capital receipt. Covered in 224, not covered in 224. Therefore fully exempt. Which means depreciation claimed by India, not paid tax on waiver. US also claims write-off. Full group is enjoying. Mass on a case, people. Beautiful structuring model on this. Yes, it went on to courts. Courts approved it. Courts said problem hi nahi hai, because issue what happened is assessing officer had no defense. So assessing officer had to prove it is there in income tax. And that time there was a section called 228 in PGBP. Which says when you are going to receive any kind of benefit or perquisites, it is fully taxable. When you're going to receive any benefits or perquisites, it is fully taxable. That is what assessing officer went with. So he said, sir, from an India perspective, I have received benefit or perquisite. In simple words, I have received a gift. Therefore it should be fully taxable. Tell me, is the statement valid? Is the statement valid? No. Understand, when did the loan come? Today. When did the waiver happen? 6 years later. 6 years later, did you give a gift? 6 years later, you simply did a waiver. If you had given a gift, it should have been day one. And day one, it was not a gift. Day one, it was a loan. Hello. Yes. Day one, it was a loan. 6 years later, it's a waiver. There is no gift here. At the same time, this was not received in money. It's a simple waiver. It's a discussion happening, which means money came to you 6 years earlier. Today, it's just a simple waiver. There is no money coming in your hand. There is no benefit coming in your hand. The benefit is just that you don't have to pay it back. Yes or no? Yes. This case went on to courts. Court said approved, not payable as tax. Which is where next year came. Amendment, and 28 was amended off. 28.4 was amended off, which came and clarified benefit or perquisite, whether in cash, in kind, or in any other mode, is fully taxable. Which means that is the year when Mahindra and Mahindra case was overturned. Luckily, it was not a retrospective change, it was a prospective change. Mahindra was safe. But now, if you do a waiver in India, it is fully taxable. Yes, this is the line of defense a lot of people play. They say, whenever I do a transaction, it's a capital receipt. Therefore, it is not taxable unless it's given in the section. Agreed, not agreed? Yes. Cases like this beautifully happen. A very simple example I'll give you. Understand a case where Rahul has a capital asset. Rahul has a capital asset. Rahul took this capital asset and converted it into a stock in trade and then ended up selling the stock in trade. Now people, when I'm selling the stock in trade, it is PGBP, no doubts about it. But when I converted my capital asset into stock in trade, this was a mere conversion. It's a mere conversion. Did I do a sale? Is there any exchange, extinguishment, relinquishment? Apo, will it sit in transfer definition? It doesn't sit in transfer definition. The moment it doesn't sit in transfer definition, people said, Rahul, conversion from asset to stock is not taxable. Is not taxable. Now that became a defense for me. People were doing accounts, beautiful accounts. You bought the asset at 1 crore. When you bring it into your accounts, will you bring it at 1 crore? People, it's your capital account. You can bring it at any value you want. That is the beauty of accounts is. In accounts, when you create a capital entry, what is the entry you pass? Asset account debit to capital account. The asset which was purchased for 1 crore, this person reported 10 crores, which means capital, and now we have a 10 crore entry. And this 10 crores was sold for 8 crores as stock in trade, which means the 10 crores became 8 crores as stock in trade. You went and told income tax department you made a PGBP loss. You want a refund. You want a refund. On the contrary, the 1 crore of asset which you bought and converted to 10 crores worth of asset is not taxable because it is not a transfer. It is a capital transaction, not sitting in 224, fully exempt. Fully. See how beautiful things happen. Yes or no? Yes, this was realized at a later stage and therefore transfer definition was amended. Transfer definition was amended to include conversion of capital asset to stock in trade. Yes, every single amendment has its own history, people, and beautiful things are happening in India. The point is very simple. When you enter into a transaction, you ask yourself a simple question. Is it a revenue receipt or a capital receipt? Agreed, not agreed? Yes. My last discussion for this chapter, people, to understand what do you mean by revenue receipt and what do you mean by capital receipt. On the top of your head, how do you look at a transaction and decide it is revenue or capital? If an activity is happening on a regular basis, it is a revenue receipt. If an activity is happening once in a while, it is a capital receipt. Very good. Yes or no? Yes. Question to you. Rahul is selling shares. Rahul is selling shares. Tell me, revenue receipt, capital receipt. Capital receipt. Capital receipt. Everyone. Revenue Q? When did I tell you that? Yeah. I have shares. I've opened up a Zerodha account. I'm having. You're not wrong. You're wrong. People understand this carefully. When I told I'm selling shares, the first question you should ask me is, who am I? The first question you should ask me is, who am I? People, if you tell me, Rahul is a CA, not in the business of selling shares. I'm not a share trader, which means for me, this is a capital receipt. It doesn't matter what's your period of holding, because lower period of holding will make it short-term gains and higher period of holding will make it long-term gains. On the contrary, if I tell you Rahul is actually a share trader, in which case whatever I earn is, you see what the difference is now? Yes, same logic, people. Imagine I am receiving interest from bank. I'm receiving interest from bank. Tell me, revenue receipt, capital receipt. Revenue receipt, capital receipt. Same question. Who am I? Am I in the business of doing financial institution tradings? If I am a business of giving loan and then I'm receiving interest, it is obviously my revenue income. It is obviously my revenue income. But if I'm not in that as a model, if I'm not doing it as a, if you are my friend, I'm simply giving you money, it does not become a revenue receipt. It becomes a capital receipt. It becomes a capital receipt because my nature of business is not that. My nature of business is not that. Agreed, not agreed? Yes or no? Yes. Understand this carefully. People, I am selling a machinery. I am selling a machinery. Revenue receipt, capital receipt. Machinery itself means it's an asset. No. If I was selling machinery, it's an asset for me. If it was a machinery which you are thinking, I would have called it stock. Correct? No, people. You are not wrong. I'm just twisting games, nothing else. Yes, तुम मेरे को जो बोलोगे मैं गलत ही बोलूँगा. Don't worry. Yes, understand this carefully. When I say sale of machinery, machinery for me means an asset only. Because if I was making machineries, I would not call it machinery. I would call it stock. I would call it stock, which means the moment I use sale of machinery, I am talking about a capital receipt. I'm talking about a capital receipt. I'm going to use the machinery and make some stock. That stock is what I'm selling. This is revenue receipt. Agreed, not agreed? So some things which you can understand, people. One, if it's a regular activity, it's a revenue receipt. If it's once in a while, it is capital receipt. If it is my nature of business, it is revenue receipt. If I'm telling, if I sell this and I generate money, it's a capital receipt. If I'm using this and generating money, that is revenue receipt. Selling a machinery itself is a capital receipt. Using that to make stock is a revenue receipt. Agreed, not agreed? Yes, these are some small bases for you to keep in mind. Any doubts on this? Sure. I'm going to ask you some scenarios plus case laws. Let's see if you're able to answer it off. Scenario number 1. Rahul is planning to open a new factory. Rahul is planning to open a new factory. It so happened, people, that to open a new factory, I'm planning to have an inauguration. Big inauguration I'm planning. Yes. Now, during that big inauguration, I went to my supplier and I told him I want 5 machineries. I want 5 machineries which I want to install in my factory. And this should happen on 1st October because 1st October is my inauguration ceremony. Yes, on 1st October, you have to give me this 5 machineries in my hand. Otherwise, I cannot do my inauguration. Supplier said, sir, promise, sir, on 31st, it will be in your hand. 30th September, it will be in your hand. I am giving you that guarantee. I'm like, guarantee and all, I don't trust. Put it in an agreement that 30th September, you will give me the machinery. Failure to do so, you will have to bear my inauguration charges. All expenses I'm going to incur for my inauguration is something which is your responsibility now. I will not take ownership on this. Unfortunately, people, 30th September, business shut down. But that day the person was not working, because of which he did not deliver my machineries. 1st October, my inauguration did not take place. 2nd October, I got pissed off. 3rd October, I went to him. People were doing the Drishyam scene. Pancham chal raha hai pura. Yes. So on 3rd October, I went to him and I said, boss, you have not delivered me my machineries. I need you to bear my 1 crore of inauguration charges. Yes. Now, people, am I interested to take the machinery anymore? My work is done. I don't have the machinery requirement anymore. So I did not take the machinery, but he had to in return give me 1 crore for the purpose of reimbursing my inauguration charges. Facts are like this. 1 crore received by Rahul for delay in giving me my assets. Without even receiving the asset. Tell me. Revenue receipt, capital receipt. Revenue receipt, capital receipt. Okay, don't give me answers, give me why. You're a CA final student. Quick. Why? Why do you have to capitalize an amount? Can you not put it in capital reserve? Okay. I'm realizing what the mistake is happening. People, somehow, somewhere, I feel you have an understanding that if something goes and hit my P&L, then it is a revenue receipt. Is that the understanding? It's not your expenditure, it's your income. Why would you capitalize? Where will you capitalize? Why would you have to capitalize? Expenditure is what you capitalize, right? This is an income in your hand. What's the point of capitalizing this? Why do you have to set it off also? You did not get the asset, no? See, that's one way of telling that yes, it's a compensation for an inauguration. I don't doubt it. But at the end of the day, why did you give that money? Is it because of the inauguration or because he did not deliver the asset to you? Hey, my job as a teacher is always going to object. Yes, you give me the right answer also, I'll object only. Don't worry about it. You give me a confident answer, that's it. Unless you are convinced, I'm not convinced. Obviously, he gave me 1 crore. Yeah. वरना मैं क्यों डिस्कशन करूंगा? Once again, who told you insurance is a revenue receipt? See, again, you're making the same mistake. You are making an assumption that something is revenue receipt because you book it in your P&L. Is that the understanding? Because last I checked in accounts, whether it is a capital receipt or a revenue receipt, everything goes to P&L. A very simple example, profit on sale of asset. Where do you put it? P&L. Revenue receipt, capital receipt. If you're getting insurance on goods, I agree. If you're getting insurance on goods, I agree. But if you're getting insurance on your asset, I checked last time, I remember insurance compensation part of capital gains also. We have section 45(1)(a), which says insurance claim given on capital assets is taxable as capital gains. I'm not denying it, you're right, but only for a specific thing. If it's a one-time income, how is it revenue then? It's actually capital. It is. It's a condition given precedent to start taking the asset itself. True. So if you tell me that the compensation is not a mandate for me to receive my asset, that itself clarifies that it's not something I'm doing regularly. You're contradicting your own statement. Okay, make a conclusion. I'll give you the answer. Make a conclusion. Revenue, 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 capital receipt. It's a capital receipt. People, you have received damages for your capital asset. You have received damages for your capital asset. The nature itself clarifies. Had you got the asset also along with you, what you would have done? You would have reduced it from the cost of the asset. Would you have put it in P&L? No. Which means getting an asset or not getting an asset is not going to change the understanding. But the fact is that if you would have got this asset, you would have taken it out of your cost of the asset. You would have called it as a grant. You would have called it as a grant. Just because you did not receive the asset does not change the characteristic of the receipt which you have received. At the end of the day, the money was received by you for an asset, which means the underlying nature itself becomes a capital receipt. The underlying nature itself becomes a capital receipt. Are you convinced? Are you convinced? You're not convinced. What happened?
Like, for example, let's say it's not a machinery, it's stock.
Different conversation. Then different conversation. That's my follow-up question. Yes, a follow-up question, people, is if I have received this liquidated damages because it delayed in my stock delivery, then is it a capital receipt or a revenue receipt? It's a revenue receipt because now the compensation is coming against my stock, which is part of my P&L, Therefore, it sits back in my revenue receipt. Here is the fact which you are trying to understand. You are trying to figure out the fact, Rahul, it's a one-time activity, therefore it is capital, and whether it is stock or asset, it doesn't matter. No. I only gave you theorems. I gave you 3 theorems. Theorem number 1, if it is revenue, regular or not regular, it is a capital receipt. That's not always the basis. Sometimes the basis is also to understand theorem number 3, which if you remember, I told you, when you sell this and itself get a profit, it is a capital receipt. But if you use this to generate profit, it is revenue receipt. The moment I am receiving compensation for my stock, the asset itself is a revenue item, so the receipt also becomes a revenue receipt. But when I'm getting this compensation for my asset itself is a capital receipt, so compensation automatically has to become a capital receipt, which means the answer is coming from your underlying asset. The answer is coming from your underlying asset. Does that make sense? Does that make sense? Yes, very good. The first case law, people, which is CIT versus Saurashtra Cements. The first case law, which is CIT versus Saurashtra Cements. If you can read this out for me, people, the case law says liquidated damages received for delay in supply of machinery is directly and intimately linked to your procurement of capital machinery. Is directly and inextricably linked to your procurement of capital machinery. It is not a receipt and profit earning process and should be treated as a capital receipt. Should be treated as a capital receipt. Are we making sense? Yes. Now here is where the highlight is. It says it is only a capital receipt because it is linked to the asset, which means if a question comes in ICI which says it is linked to your stock, you should understand it is not a capital receipt, it is a revenue receipt. That is what the height is. Yes. Now ICI has only given you a question on the machinery. It does not mean that they cannot test you on stock. If they are asking you on stock, please understand it is a revenue receipt. Are we making sense? Yes, be very, very extremely careful on this. Any doubts on this part? Are we making sense? Ready to go? Ready to go? Yes. Perfect. Scenario number 2. Scenario is like this. I am running an agency business. What am I running? I'm running an agency business. For example, I am running a geo center, which means my job is only to sell geo products. I'm not selling anything else. Yes. One of the days, what happens is the geo guy comes to me and comes and says, Rahul, I'm extremely happy with your service. So much happy that I don't want to continue anymore. Yes, please, dafa ho yahan se. Yes, I don't want you in my business anymore. You're already making me losses. My way of sarcasm, people, nothing else. समझ में आया तो ठीक है, नहीं तो छोड़ दो. Yes, so Jio has come to me and come and told me that I do not want your services anymore. I would like you to move away. Yes, now I was very unhappy with this, but nevertheless, thankfully, in my contract with Jio, I had already put in a clause. The clause had said that Jio cannot take away the ownership for the next 3 years. Now that they've come back after 1 year, I went to Jio and said, you're violating the contract, which I am not happy. Therefore, in return of the compensation, you have to pay me 5 crores. You have to pay me 5 crores. Jio said, it's better to pay you 5 crores than to continue. Rakh le, dafao. I don't want that with you. Rahul has received 5 crores for reducing my business with Jio once and for all. Tell me, revenue receipt, capital receipt. Revenue receipt, capital receipt. Don't stare at me, people. Give me an answer. It's a. Why? Regular आप பண்ணிட்டு இருக்க? Doing in this revenue. Why?
First, regular नहीं होगा.
Okay.
Second, it is for closure of that business.
Yes.
So a business is like selling of a business will be a capital receipt.
True. Very good. People, this comes from an understanding that when you took over the agency, this was your whole bread and butter. Your life itself was running based on this. The moment this agency was shut down, your business itself got shut down. You could not continue your business anymore, which means this automatically became a capital receipt because your profit earning capacity itself has shut down. In very, very logical terms, people, we call it non-compete fees, if you have heard about this. Yes, the moment I gave you this money, I have told you, you are not going to do any more of my business. It's not non-compete fees exactly, but I can put it in that way for your understanding of. Yes, so this becomes a capital receipt. Are we making sense? Yes, beautiful. Follow-up question on this itself. Imagine Rahul is running a shop in which Rahul is selling Jio, Airtel, B and BSNL. Rahul is selling. Yes, Rahul is selling all the 4 products of. One of the days, Jio comes to me and says, Rahul, I want your exclusivity. You should only sell Jio. I'm like, तुम्हारी इतनी sale हो भी नहीं रही है. You're not making that much sale that I should be taking exclusivity with you. I would like to continue with my independent model. Yes, Jio got pissed off. Jio was like, no, boss. Either you become exclusive or I am moving out. I'm like, okay, dafao, move out. No more. Yes, I don't care. I don't want you anymore. You can move out. But there is only one problem. My agreement with you says 3 years lock-in. You're moving out within 1 year. You have to pay me compensation. This time, Jio has now paid me 5 crore rupees for exiting my agency with him, where I have multiple other opportunities. This is not the only agency I'm running, which means even if Jio goes, my business will continue. Keeping that thought in mind, revenue receipt, capital receipt. Revenue receipt, capital receipt. This is a revenue receipt. You're still stuck on the fact that you're getting it only once. Forget the fact. Understand this carefully. Just because Jio left, did my profit earning capacity shut down? Am I still able to run? One thing is very clear. When I'm running multiple agencies, this is a clause which I would not just have in Jio's agreement. I would have it in all my agreements, which means I'm okay with getting this from everyone. Apo, this becomes a business transaction. It's a normal business dealing with me and you. It's not that it's supposed to be invoked every year, but at the same time, it can be invoked whenever required, which means I am not going to lose my business earning capacity. It still continues to be a revenue receipt. Here is the fact difference. In this, what have I concluded? If my business itself will shut down, it becomes a capital receipt. If it's not going to impact my business, it is a revenue receipt. It's not, no. You're only doing an agency. You're only shutting down the agency now. When you're shutting down an agency, are you going to continue his business? No. Are you selling him something? Nothing. Yes. So this is still continuing to be a revenue receipt because you're not doing it as your bread and butter. My bread and butter is still alive. I'm still able to run my job properly. And therefore, this becomes a revenue receipt. Clear? Yes.
The last one is only left and my bread and butter is going on with that. So when the last one is leaving, will you change the investment?
The moment the last one leaves, it becomes a capital receipt. because now my bread and butter is gone. My business will shut down because of that. But until my last one is not leaving, I'm continuing to call it as a revenue receipt for all my transactions. So it's as if coming and saying a very simple example, people. Imagine I'm running a stationery shop. Now, obviously, when I'm running a stationery shop, every person is going to give me some products. Now, obviously, when I'm going to go to every person, I'm going to tell him what? Boss, if I'm promising that if you're promising that you'll deliver on the 5th day, you have to deliver it on 5th day. If not 6th day, you'll be liable for compensations. Yes. Now, every time there is a delay, he's going to give me a compensation. It does not mean that he has to make a delay, but I have a safety clause with me. The safety clause says that every time there is a delay, you have to give me compensation. Now, whether I receive or don't receive the compensation, will my business shut down? No, which means it's going to be a part of my regular transaction. I'm okay to collecting this penalty from him every once in a while, which means it is a revenue receipt. Agreed? Yes. At any point of time, it is not going to impact my business as such on a majority level, and therefore it continues to be a revenue receipt. That is what the understanding is.
I get it from someone else. My business is not going to get impacted.
That's true. But here is not the case of the business impact. Here is the case that the money is received for what? It's directly linked to an asset. See, that's what I'm telling you. When I discussed about 3 differences with you, all the 3 differences work independently. Yes, which means in some cases you will have to look at one of the difference. In some cases you'll have to look at the second difference. In the example number 1 which I gave you, the Saurashtra Cements comes and uses the theorem number 2, which says when a money is against an asset directly, then it is a capital receipt. Here I'm talking about theorem number 3, where if my business itself is dependent on this money, then it is capital receipt, which means you have to look at every transaction independently of. It is not always true that once in a while is a capital receipt. It is not always true that regular items are revenue receipts. Yes, it's all about how you understand things carefully. Make sense? Make sense? I'm going to relate this to something more, people. Imagine Rahul is working in a company. Imagine Rahul is working in a company and the company is giving Rahul salary. The company is giving Rahul salary. After a couple of months, the company came back to me and came and said, Rahul, you're doing an amazing job. The job which I don't require. Therefore, why don't you quit? Why don't you quit? I want an immediate resignation, leave and go. I'm like, sir, I'm not interested to leave. He's like, Rahul, I am not resigning you. I am throwing you out. I said, sir, if that is the case, put it on paper that you're throwing me out because you are now liable to pay me severance pay. We call it severance pay because you're leaving me right away. You have to pay me severance pay. Agreed, not agreed. Company ended up paying me 40 lakh rupees for severance pay for them to exit me off once and for all. Once and for all. People who received the money. Rahul received the money. Tell me carefully, Rahul, this is the bread and butter. Because Rahul is in employment. For Rahul in employment, Rahul, this is his bread and butter, which means money received by Rahul is a very good, is a capital receipt, will be treated as a capital receipt. Now, I want to make it very clear. At no point have I discussed with you whether it is taxable or not taxable. That's a different conversation. That is a conversation which we'll do in respective chapters of. But right now it is all about telling whether it is revenue receipt or capital receipt, because the moment you declare something as capital receipt, I will have to include it to make it taxable. Until I do that, it is exempt. Until I do that, it is exempt. Are we making sense? Yes. Last example which I gave you, people, about the salaries. The last example which I gave you about the salaries is already clarified in salaries chapter as section 15. We talk about something called as profits in lieu of salary. Profits in lieu of salary, which comes and clarifies that if you receive such kind of capital receipts, a severance pay, it will still be treated as income. It will still be treated as income and therefore will be fully taxable. Will be fully taxable is what the clarification is. Yes. So I am not discussing with you right now whether it is revenue taxable or not taxable. I'm simply trying to understand whether it is revenue or capital. Are we making sense? Yes. So by the 3 examples which I gave you, the understanding which has come up is that if something is going to impact my livelihood itself, it is a capital receipt. If not, it is a revenue receipt. Making sense? Yes. Perfect. It's not a business and you're doing an employment. If I'm running 2 employments, okay. But one second, just for my understanding, how are you doing 2 employments? Is it legally possible? Part-time jobs. If you're doing a part-time jobs, are you technically a salaried employee? Still sits in my business model. Yes. Yes, you are called a salary guy. No doubts about it. But it's like coming and saying that you're not dependent on one another, right? So in that case, yes, you can definitely talk about it this way. Yes. I generally, at least in India for that matter, you're not permitted to do multiple employments, legally at least. Yes, we have this weird concept. I don't know how many of you are aware about it. It's very common in engineers. It's called shadow employees. Kya? It's called shadow employees. Shadow employees is basically he is actually working for 5 different companies, but no companies are aware that He's working for them. Yes. So basically what happens is I take 5 different employments working for every single person, but no one knows about it. Yes. Technically, India does not permit these kind of employment opportunities. You can't end up doing 2 employments at a single go. Not permanently permitted in India as such. Perfect enough. Clear? Any doubts? Yes. Last example for me to close people before I give you the case laws of. Example is like this. Rahul is receiving gift from his boss, employer. Rahul is receiving gift from his boss, an employer. Probably he's given an Amazon gift card to you because you've done an amazing job. Revenue receipt, capital receipt. Quick. Because you'll receive gift on a daily basis. How nice is your boss? That's not the question. I'm not asking whether it is taxable or not. Yes, you did. Is it a revenue receipt or capital receipt? You said revenue because it is received in the course of your employment. Okay. Severance pay is also during the course of my employment. Gratuity is also during the course of my employment. Is gratuity a revenue receipt? No. Revenue capital, quickly. because you are still in the bottom. I am not in theorem 3 now, just to clarify. I've moved off. I'm done with that example. Now I'm in different theorem. Tell me revenue receipt, capital receipt. Quick. This is, Why? Why is it immaterial? Hey, I'm not talking about your boss who's going to give you chillers. I'm talking about actual gift. You're working in an MNC. MNC can really give you gifts. You can easily get gifts of 1.5 lakhs. Don't talk about the quantum. I don't care. I'm not talking about that person who gives you the Nykaa ka 10 rupees ka voucher, jaake karwa lo nail polish karke. Revenue receipt, capital receipt. Very simple. It's a capital receipt. Here is where I'm going back to theorem number 1, where it's not something I'm going to receive regularly. Yes, at least knowing my boss, I definitely know I'm not going to receive it regularly. This becomes a capital receipt. Yes. Scenario number 2. I am running a business. In that business, I have a trading along with Samsung. Yes, Samsung has one day come to me and come and said, I am very, very happy with your services. Genuinely this time. Genuinely, I'm very happy with your services because you have sold so much of my TVs. Here is a free air ticket. Why don't you have a London visit and come back? London, UK, kahan gaya tha? Jetalal went to London. UK visit. Yes, you can go for a UK visit. I am sponsoring this whole trip for you. Rahul or the business, whoever that matter, has now received a free air ticket from my business. It's a gift received under a business. Tell me, revenue receipt, capital receipt. Same, it's a capital receipt because once in a while transaction. Last example, very obvious transaction. I am receiving some kind of a land from my girlfriend on Valentine's Day. मुझे ज़्यादा अच्छी बात है, but ठीक है. So I've received a land. क्या देख रहे हो? मैं सोच रहा हूँ. Trying to imagine my girlfriend somewhere. Yes, I've received a land from my girlfriend on a Valentine's Day. Tell me people, revenue receipt, capital receipt. पहले मिलेगा नहीं, वो अलग बात है, but ठीक है. Boys भी gold digger हो सकते हैं, क्या पता. Because is it the land important or is the gift important? Is it the land important or the gift important? It's the mobile phone दिया तो तो land is important or the gift is important? The gift is important. This continues to be a capital receipt, which means people, gift received in any format is a capital receipt. Gift received in any format is a capital receipt. Are we making sense? Yes, perfect. This is what the examples are, people. If you can read the example, see now if you can relate it properly. First example says liquidated damages received for delay in procurement of a capital asset. Answer is capital receipt. Compensation received for terminating agency business being the only income source. Capital receipt. Compensation received for termination of agency who has multiple source of incomes. Revenue receipt. Compensation received for termination of employment. Capital receipt, because employment is my only source of income. Last one says any kind of gift received is a capital receipt, whether it is received from my employment or from my business or from other sources. Does it matter? It does not matter. It does not matter. Are we clear? Are we clear? Any doubts on this? Good to go? Yes? Good. Two case laws for you to understand, people. Shall we? Yes? Good. Case law number 1. It so happened that there was a company called HS1. There was a company called HS1 and there was a company called HS2. Yes? Now these two companies have come together. These two companies have come together and have now decided that they wanted to open a JV. Open a joint venture. So they came together and they opened up a JV here. Yes? Imagine the JV is in India. So they opened up a JV called HSJV. Called HSJV by entering into something called as a TCA. By something called as TCA. What is TCA? It's called Technical Collaboration Agreement. Yes. So which means HS1, HS2 came together, created a technical collaboration agreement. They said we will collaborate with each other and open up a JV in India. Yes. Now people, the JV which is sitting in India, ownership is with both HS1 and HS2. Now, if you understand this carefully, they've opened up a technical collaboration agreement, which means this HSJV, which is sitting in India, is going to be providing technical services. Which means he would need some know-hows. What is know-how? Intellectual property rights, IPRs. Yes, it's going to need some know-how. So what has happened, people? The know-how will be provided by whom? By the HS1 and HS2. So what has happened is HSJV in India has now started providing technical service for which it needs know-how. For that know-how, it goes back to HS1 and HS2 and says, I need know-hows from you. In return, I will pay you technical fees. I'll pay you technical fees. So what has happened, people, is that now HSJV is ending up paying technical fees to both HS1 and HS2. Now, if you understand this carefully, unless I pay this technical fees, will I get the know-how? If I don't get the know-how, can I run my business? Which means, moment I make this payment only, I can run my business. The moment I make the payment only, I can run the business. And I'm making this payment of technical fees only because there is a technical collaboration agreement. Had there been no TCA, I would have not paid the technical fees, which means only because there is an agreement, I am paying this technical fees. The moment the agreement is shut down, technical fees will shut down, company itself will shut down. Correct? Not correct? The moment the TCA is abolished, what will happen? I will have to shut down JV. Which means what is happening in the agreement, it is clarified that you have to pay me technical fees. Only then can you open the JV. If you stop paying the technical fees, the JV will be shut down. The technical agreement will be gone. Background clear? Yes. On this facts, people, what has happened is HSJV is now paying technical fees to HS1 and HS2. The assessing officer came to HSJV and came and said that the technical fees which you paid is for you a capital expenditure. Because this payment is happening on account of the TCA. And the moment the TCA is shut down, you also will shut down. Which means the moment you are making this payment only, you are alive. The moment you stop this payment, you will shut down, which means it is completely linked to your business. Is what assessing officer said. That assessing officer treated this as a capital expenditure. Clear with me? Yes. HSJV on the other hand went and said, sir, for something to be a capital expenditure, it needs to be paid only once. This is a technical fees which I will pay regularly. Because I'm making this payment regularly, you have to understand this is a revenue expenditure. So the facts before you are as follows. You are the judge of the court. Two people have come to you. Assessing officer says this payment is a capital expenditure because without this payment, the business will shut down. And assessee says it is a revenue expenditure because I am doing this on a regular basis. What is the right answer? Welcome to CA Final. What is the right answer?
JV is getting
Created only because of the TCA.
know-hows from the board.
It's automatically understood from the TCA itself. I created a TCA, created a JV based on that, and the TCA itself says I have to pay me technical fees. Bye. If it's required to run the business, this becomes my only income source. That's a capital expenditure. We just discussed. If I don't make this payment, what happens? The business shuts down. Correct? If the business is going to shut down, then this is my bread and butter issue. You're not contradicting your statements, both sides. Because
डेप्रिसिएशन जैसे मशीनरी जैसे ले लो उसका भी एक लाइफ होता है यूजफुल लाइफ उसके बाद से I'm giving technical things intangibles को तो मैं कैपिटलाइज कर दूंगी बुक से
you're giving technical fees, you're going to capitalize intangibles. Yes.
एक जैसे डेप्रिसिएशन for let's say I'm writing it off
So you're telling me that you're going to take the technical fees and you're going to capitalize it off and still claim depreciation on it. Yes. My only question is, if you're doing that, you will have to capitalize every year because you're paying it every year. Are you going to capitalize depreciation, capitalize asset cost every year and claim depreciations? Every year keep adding 10,000 rupees. Would that work? Logically not. Quick. Capital revenue. It makes products. It uses the technical know-how, makes products, makes the delivery of the products. Just to clarify, HS is Honda CL. Okay, the company's name is Honda CL. Honda CL is obviously into automobile industry, right? So they're going to use the technical know-how and they're going to make some products out of it. Quick. Because
If TCA is not there,
So if I don't have the TCA, the company will shut down. Therefore, I have to make this payment properly. Otherwise, it is not going to be a business relevant, which means it is linked to my business, running of my business. Therefore, it is a capital expenditure. Because I'm making the payment regularly.
just like how you said you use a machinery to make products and products which is the revenue received so same way is an intangible
1 second, Prem.
same way is an intangible asset which you make
When you say it's an intangible asset, that itself means it's a capital expenditure. Maati pesrani. I have a single supplier. Yes, I do.
the expenditure which you make to that supplier you don't see
but when you stop meeting the expenditure,
So if I, so, one second. So I understand your question. So if you have a solo supplier and you're making payments to him, that does not make it a revenue expenditure. That's true. But tomorrow, if the supplier is not there, will you shut down your business? Why? Is it given anywhere in the contract that you cannot run a business without him? It might get impacted, but we shut down because of it. Can you always look for an alternative source? Here is a case where if you don't make the payment, you will have to shut down. It's a mandate. That's how the agreement has been drafted itself for the startup. Okay, not to waste any time. Answer is capital expenditure. Yes, Yogi is perfectly right on this. Understand, people, the technical fees is not being paid because of the know-how alone. It is being paid for the fact that it's part of the TCA, which means the TCA has now made an obligation under me to make this technical fees payment. And without making of this payment, my TCA becomes invalid. Without the TCA, my JV becomes invalid, which means as long as I continue this payment, my business is alive. The moment I stop making this payment, my business will shut down. My business will shut down. I will not be able to run my business anymore, which means this payment is keeping my business alive. And that itself means it is a capital expenditure. It is a capital expenditure. Yes, that's a weird question. See, if you have to come and ask me, I would think, I don't know what the right answer is. I would think that what happened is earlier when the company went and made this case, they were using it as a revenue expense. But now that it's become a capex expense, like I said, what you'll have to do is you'll have to account this every year. Or alternative number two, what you can do is you can present value the whole thing and account the bulk as an intangible asset and call this payment as a repayment of loan. That's what I'm saying, right? So what you can do is you can present value the whole cost and you can create a bulk asset. It's like hire purchase basically. So you create a bulk asset and then whatever payments you're making, you will now call it as a repayment of a loan model. Yes, so it'll become a hire purchase model. That would be the most obvious option which I would choose. But here is also a good difference because the moment you create a bulk expense in your books, assessing officer would come and say, well, can you claim depreciation on this? Yes, so that would become a challenging part of it. On the contrary, I would imagine you can rather capitalize it in your books and you can claim depreciation on a yearly basis. Yes, so that's the most easiest thing which I would do of. But yes, definitely difficult question to be answered off to that extent.
Yearly subscription. But the tally should be calculated.
Can you not run business without a tally? So if you purchase a tally and you're paying regular expenses, is it capital or revenue கேக்குற? Tally இல்லாம work பண்ண முடியாது சொல்றேன். You maintain it to that, but tomorrow if you don't have tally, can you not move to another software? Is there somewhere a discussion between you and tally saying that unless you use tally only you can run business? Have you done that? No. I have always an opportunity where I can say tally is not working out, let me move to SAP, let me move to Oracle, which means your business is not dependent on it. You have a choice to make. This person never even had a choice. I took away his free will. Because I took away his free will, he doesn't have a choice and therefore it becomes a capital expenditure. Correct? Yes.
So there is a lifetime subscription.
The bottom, that's an asset. Because then you have to amortize it over the years. Yes. Prem, you had a doubt?
Yes, sir. Sir, if HSGV can prove that business is certain to continue, they can say it is a revenue expense.
Yes, but they can't prove it, no, because the agreement itself very clearly clarifies you can't do it. The agreement says the TCA requires you to make the payment to the JV, and only when you make the payment to the JV can you continue your business. The moment you stop doing that, the TCA is not valid.
But they can still prove, no, sir.
How? Can you override the agreement?
Just with the thing, but they can prove now it is certain business is not going to close, so the compensation is. So when the business is closed now, the TCA will be there.
See, that's the thing about JV's frame. The whole reason that you call something as a JV is that the person is now completely dependent on you, which means he can only work based on your direction. Had you created this as a subsidiary also, I would have agreed your fact, because then I have independence to do things. But the moment you created something as a JV itself means that you have complete dependency on your parents. You can't run an operation without that.
Okay.
Right? So that makes an invalid statement to that extent. Yes,
Okay.
which is what is very good as a thought. Sorry, Prem. Which is what a very good as a thought people. I'm sure everyone would have seen this. A lot of companies who have subsidiaries in India do end up paying something called trademark fees, IP licensing fees and all. Have you seen them making it as an expense or have you seen this capitalizing in the books? It is treated as an expense there because there is a case where I have a subsidiary. Subsidiary means I still have a choice to continue on my own operations. Yes, I'm using their benefits. Yes, I'm using the trademark, but just in case they don't give me the trademark, does it mean I will shut down? No, there is no obligation to that extent. Tomorrow, yes, if I don't pay them the trademark, they'll come and say, don't use my brand name. I can still move to another parent. I can ask them to sell my business, move to another parent, which means I still have my independence. My business will not automatically shut down based on that. But a JV comes with its own problems. JV cannot run without the parent. There is no way of you selling your JV to someone else, and that becomes a dependency issue on your case. Does that make sense? Yes. Prem.
Sir, another doubt I have posted.
Yes, I saw the message. So I'm just going to read it out for everyone. The question which Prem asks is, if you're taking classes and earning revenue out of it, and then you quit your job, is it a revenue receipt? From what?
That compensation, 40 lakhs compensation, that example.
So academy is telling me to start taking classes and leave my job, for which they're going to give me 40 lakhs.
No. The company fired you, but you having the
Second hobby. Okay. Oh, so I'm running two things, people. I'm teaching also. I'm working in a company also. Yes. Now the company has thrown me out, and therefore I am receiving 40 lakhs from the company. Luckily for me, I have an alternate job going on. As in, I'm running a business normally. In that case, will it still be treated as a capital receipt or not? Is the question.
Yes, sir.
It will still be treated as capital receipt because at the end of the day, when the company gives you the money, the company is not looking at what you're doing in sidelines. Yes, from a company's perspective, your side hobby is not going to make an impact, right? So from a company perspective, the moment they make the payment to you, it is always understood that for you it is a bread and butter model. Yes, you may be doing this as a side hustle. I'm not denying it. In fact, sometimes I've seen that teaching gives you more money than your classes from your office also. No doubts about it. but that does not mean that the company is looking at it differently. Now, just because I'm running a different operation and you're running a different operation does not make a difference for me. It will still be treated as a capital receipt. I can still defend on those lines.
Sure.
Yes, assessing officer may object it otherwise, but you can still defend it on those lines.
So, but
Yes, Prem.
for you, it's a revenue receipt. For you.
See, again, when you talk to me on that extent, my only question is, why would I like to do it? Do I want to pay more tax or do I want to treat it as less tax?
You wanted to pay less tax, but assessing officer will say that.
I would say my assessing officer that, sir, my teaching is not my primary source. It's something which I'm doing as a side hustle. A hobby cannot become my primary source of income.
No, I'm going back to that. Your bread and butter is not affected. So there is a revenue.
And that's the question. No, how do you say that?
Because you're taking classes. Assessing officer will know the fact.
Okay, let me clarify this. People, just because you see a faculty taking classes does not mean he's automatically rich. Okay, for those people who open up their calculator, Rahul को मैं इतना दे रहा हूँ, इतने students है. It does not automatically mean that Rahul is earning enough money, people. You are aware about my revenue. You're definitely not aware about my expenses. Yes, तुम्हें printing करवा के देना, classes रखना, ये AC चल रहा है. Yes, a lot of expenses which take place. We generally don't end up getting so much also. बता रहा हूँ, openly बता रहा हूँ. Yes, point is, people, it's on my choice, right? Now, to be very honest to you, let me clarify this once again. Everyone looks at it differently. Yes, from a teaching perspective, you have to come and ask me. Jitu Bhaiya would probably call his teaching income as a PGBP income because he's doing it full time. Atishay may call his teaching income as a full PGBP income because yes, he's running a side hustle also. He's running a CA firm also, but still he's generating more money from it. From a perspective of Rahul, I treat this as an IFOS income. Yes, I'm getting good money, no doubts about it, but I still don't care. I went and I declared myself as an IFOS income because I said, sir, I'm doing this more as a hobby. This is not something I'm treating as my business. At the end of the day, people, this is the funny thing in income tax. How do you decide something is PGBP and something is IFOS? You don't know. There is no basis. Yes, because PGBP says profits from business. IFOS says everything else. Which means as long as you tell it is business, it is PGBP. When you say it is not your business, it is IFOS. There is no way to prove it otherwise. I can always come and say this is my side hustle. Because for me, my main work is office. So I can say I'm a salaried guy. For me, teaching is a side hustle. Yes, I may get more money from teaching also, but that's not something I'm going to tell him that. Yes, I'm going to tell him, yes, sir, I'm lucky because I teach well. Maybe students are coming in well. That does not automatically make it my business income. It's not because I started with an intention that I want to do salary only. It's just something which I'm learning on a side hustle. Yes, that is what the difference looks like. Yes, so which means to treat something as my income source or my only bread and butter is always a choice. If I move something to IFOS, that itself means that I'm treating it as not my income source. Yes, so that helps me defend myself, Prem, no doubts about it.
So can we conclude by saying that irrespective of any income out of shares or
yes, definitely,
any income, so the salary, the
compensation from employment will always be treated as capital receipt.
capital.
Yes, definitely, yes. Perfect. Yes, good. Case law number 2, and I'm done with this chapter, people. Case law number 2. Oh, by the way, this case law is called Honda CL. Yes, so case law of Honda CL has now come and clarified, saying where a technical collaboration agreement is entered into for setting up a JV. The moment I'm entering into a technical collaboration agreement for setting up a JV company, and the TCA is such that the termination of the agreement, the JV will also come to an end. The JV will also come to an end. So I am now having conditions, people. Condition number 1. The TCA is helping me create a JV. Condition number 2, the moment TCA shut down, the JV will also shut down. In that case, the technical fees which is paid will be treated as a capital expenditure. Luckily, the court also come and clarified it's an intangible asset, which means you are eligible to claim depreciations. You are eligible to claim depreciations. It cannot be treated as a revenue merely on the ground that the assessee can only use it as a licensee without any proprietary rights. I am not coming and saying that for you to treat it as a revenue expenditure, you need to have no rights. I am still okay with that. I'm still okay with it. I'm still going to call it as a capital expenditure. It does not change the characteristics. It does not change the characteristics. Are we clear? Yes, 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 beautiful. The last case law which was introduced last year, people, this is a case law which honestly, if you come and ask me, I am not very comfortable with. Yes, I objected to this case law once in a while, but nevertheless, the case law was like this. It so happened, people, that I am Mr. A. Yes, now this Mr. A has gone and taken up an office space. It's taken up a office space. Now, because I've taken up an office space, people, the owner of the office space normally has a practice to collect security deposit, obviously, has asked me to collect security deposit. So what has happened is Rahul has gone to this office space, and this office space guy has come and told me that you have to pay me 2 months worth of security deposit right away. 2 months of security deposit right away. But please don't worry, this is a refundable deposit. It's a refundable deposit. So which means Rahul has ended up paying 10 lakhs to this guy as a security deposit, refundable on a future date. Yes. Now people, because this is refundable, the money which I paid to him, can I claim it as an expense? Can I claim it as an expense? No, I'm going to show it as an asset in my books. I'm going to show it as an asset in my books. I'm going to call it rental deposit. I'm going to call it rental deposit. I was in this operations for about 5 years. 5 years later, I said, sir, I want to move to a different space. I want to move to a different space. At this point of time, I went to him and I said, I want my money back. I want my money back. Problem, what happens to people? Normally, landlords are never nice. Yes, the moment you said you're moving to another space, he came to your office and he said, this is damaged, this is damaged, this is damaged, this is damaged, everything is damaged. I will have to incur repair expenses for getting all this damage done. I am not paying you your deposit back. I am not paying you your deposit back. I was pissed off. I went to him and I said, sir, I want my money back or we are going to court. We're going to court. He was like, let's go to court. I am not giving the money back. We ended up in a dispute. We went on this dispute for about 6 months, people. After 6 months, I started realizing to go to court, incur court fees and all, I might as well let go of this. So went after 6 months to him and I said, sir, you know what? Forget it off. It's worthless to sit and fight with you. You might as well keep the money. And therefore, I decided to forego the deposit of. Now, because I forgot the deposit of, I went back to my P&L and I claimed this 10 lakhs as a expense. And I called it foreclosure of my security deposit of. Yes, assessing officer came to me and said, Rahul, when you gave the deposit, it was a capital item. You put it in your balance sheet. Now that you're writing it off, you cannot automatically start calling it as a revenue expenditure. It will continue to be a capital expenditure. Yes, so my assessing officer ended up disallowing my foreclosure and said you have to treat this as a capital expenditure with an additional thing. Because this is foreclosure, there is no asset into existence, which means no depreciation. Apo assessing officer treated this as a permanent loss. He treated it as permanent loss. He said nothing will be given back to you. No revenue expense, no depreciation also. This is going to become a permanent loss in your hands. I was like, sir, this is unfair because I did make a loss. Some way or the other, you have to give this back to me. Yes or no? Otherwise, it makes no sense. Agreed, not agreed? Yes. So we both went to court. I have pleaded myself saying that, sir, this is an expense, a loss which is incurred by me. I need the expense of. Assessing officer has gone and said, no, cannot give it because he has written off an asset. And in income tax, if you write off an asset, it is a capital expenditure. Furthermore, I will not give him any depreciation also because asset has not come into existence. My judge of the courts, tell me who was right. Quick. Who was right? Why? It's not okay. It's a capital deposit. It's a capital nature only. Therefore, it is okay. Anyone else? People, you would have seen this very commonly happening of. Yes, it's a very, very common practice to make a deposit and people do not give you the money back. It's a very, very common practice. Yes, and 99% I've seen everyone treating it as revenue expense only. I have always seen it as treated as revenue expense. So think practically also and tell me what is the right answer. People, I told you, you're at CA final level. I'm not going to give you answers. You're going to make answers for me. Think law. Tell me what the right answer is. Don't get emotional first of all. Yes, Rahul, मेरे को loss होने वाला है. Depreciation is also not given. तो दे दो मेरे को. No emotional answers. Think practically. Quick. It's a yes or a no game. That's it. Huh? As capital expense. बाप रे. हाँ. सोच रहा है. Think quickly. People, we have 300 case losses. सोचते रहोगे तो हो गया चैप्टर, फिर सिलेबस खत्म हो जाएगा. इस मई बैच के बाद हम लोग सितंबर तक लिखते रहेंगे एग्जाम. जल्दी. माइंड में जो आए वो सही है. You want to treat it as revenue, but emotionally capital இருக்கு. Capital. Sonia. Capital. Capital. Everyone? Revenue, क्यों? Doesn't have to. You're again making the same mistake. When I discussed about things, I told you there are 3 theorems. Don't rely on one theorem and give me answers. It has to satisfy all the rules. It's a confusing thing. I don't deny it. It's very confusing because you have to use one of the theorems. You don't have to use another theorem. Very confusing. No doubts about it. But think about it practically. People, answer is capital expenditure. Answer is capital expenditure. A case law came in last year, people. One of the most hated case laws in the whole industry right now. A case law of Mahele Systems. Yes, Mahele Systems came and clarified saying, just because you're going to forego a security deposit does not automatically make it a revenue expenditure. At the end of the day, you have written off a asset. The moment you wrote off an asset, it automatically becomes a capital expenditure. It becomes a capital expenditure. I cannot give you this as a deduction. You will have to write it off. You'll have to write it off. And very, very unfortunate case law, people, because obviously in a practical scenario, every landlord is going to take away money from you. Yes, and to that extent, you will never be able to claim this money back, which is what is the problem going on. So one thing which I've always started telling, I've started telling all my friends going forward is never declare an income tax that you've made a refundable deposit. Always declare it an income tax that you've made a non-refundable deposit. The moment you declare it as a non-refundable deposit, it is an expense on the first day itself. It is an expense on the first day itself. You will not be questioned anymore. Yes, but Rahul, in the future, I will get back the money. No, very good. Reverse the expense off. Yes, you can always report it back as an income on a future date. At least if money is taken back from you, it is not gone. It is not gone. So that's a small hint, people. Capitalizing it in your books is now causing problems. Don't do it anymore. Don't do it anymore. Are we clear? Yes. So go back to your accounts, check your financials, and tell your bosses, your clients, and everyone that if you see an asset showing in the books as security deposit, please write it off right away. Please write it off right away, because otherwise, if you don't get the money back on a future date, it's a gone case forever. It's a gone case forever. Be very, very careful on those adjustments off. Are we clear? Yes. Case law for you people. Case law is last one, which is called Mahele Anand Filter Systems Private Limited. Case law says foregoing a security deposit to settle a dispute cannot be treated as a revenue expenditure. So if I'm going to forego a security deposit, it is not going to be treated as a revenue expenditure merely because it was paid in the course of a dispute. The character remained of a capital expenditure cannot be so even if I forego the expense of. Even if I forego the expense of, the characteristics will not change. Will not change. Are we clear? Yes. So 3 case laws for you to keep in mind, people. Case law number 1 was about Saurashtra Cements, where we came and said if you're going to receive money for delay in receiving your capital asset, it is linked to your asset and therefore is a capital expenditure. Second, if I'm going to have any JV created by a technical collaboration agreement and the payment in that JV is happening solely to keep my business alive, then it is a capital expenditure. At the same time, if I'm going to make any payments, if I'm going to forego any security deposit because of a dispute, it will remain as a capital expenditure. The characteristics will not change. Will not change. Are we clear? Yes, yes, beautiful. This is your chapter number 1, basics of income tax. Any doubts on this chapter? No? I'm going to take you back from the first page of it, people. Let's see if you have answered off all the questions in the flow of whatever discussions we have done. Yes, not marking anything. Nothing is important. I will tell you what to mark. So keep it on hold. Looking it as a topic, looking it on a topic level. What am I discussing about, people? A couple of things which we need to understand of. First, when it comes to Constitution of India, article number 265 gives the powers to collect and levy taxes to an authority of law. 246 talks about the laws to be created. We have entry number 82, which talks about Income Tax Act, then then we have the difference between direct tax and indirect tax. Direct tax is levied on income, indirect tax is levied on expenses. Which one is progressive? Direct tax. Which one is regressive? Indirect tax. People, I'm reading syllabus, not practical issue. Yes, shift of burden happens in apparently shift of burden happens in indirect tax, does not happen in direct taxes. We have laws and act. Laws are split into act, rules, circulars, notifications, case laws. Act for you is called Income Tax Act 1961, along with Finance Act 2020 5. You have Finance Act 2025. You also have something else called Taxation Laws Amendment Act 2025, which we will discuss separately, not relevant right now. Yes, then we have rules, which is Income Tax Rules 1962. Then we have circulars, which is binding on department. Notifications are binding on both department and assessee. And then we have case laws, hierarchy of case law people who can first go appeal. CIT appeals, go on to ITAT, go on to High Court, finally to Supreme Court. That's what the case laws are going to look like. That is all theory given to you people. Only thing to be kept here is binding on department. Binding on department. Here it is binding on assessee and department. Both the people are going to be binded on this. Both the people are going to be binded on this. Then we have judicial pronouncements people, and then we have some definitions, not important at final level, not clear. Yes, so we have India, we have person definition, we discussed individual, HUF, firm, companies, AOP, BOIs, local authorities, and AJP. Yes, in AJP you can probably put an example. Example is called, very good, example is called liquidators. Yes, we will discuss about this when we come to a chapter called Liability in Special Cases, volume number 2, but I'm just giving it out to you so that you understand this better. Yes, yes. After that, people, we have the definition of assessee. Then we have discussed about a few things, which is called charge of income tax. In the charge of income tax, we have first discussed what is a previous year, we have discussed what is assessment year. We have also discussed what is a person. We have discussed assessable, rates in force. We have moved on to the definition of income, where now income comes and says some things to be kept in mind. Income can be taxable, whether it is regular or one time, can be taxable whether it is in cash or kind, can be taxable whether it is legal or illegal. But when you talk about incomes, income means revenue minus allowable expenses. It is gross income minus deductions, which is allowable. It is gross income minus deductions, which is allowable. You have two kinds of incomes people. One is called capital receipt, one is called revenue receipt. Capital receipt is always taxable only if it is 224, and revenue receipt is taxable always. Revenue receipt is taxable always. Yes, yes. And then the examples which we have discussed of people. Examples, okay, not very critical. Case laws are more important. So focus on the case laws. You can expect it as a part of your compulsory question. It will be part of your compulsory question. You will get one small adjustment in your compulsory question, which will say security deposit has been foregoed in the current year. 5 lakh rupees has been debited to P&L account. Can you claim it? No. So you will disallow it off because it is a capex expense. It came in September 25 examinations. Yes, September 25 examinations, Mahile case law came in, where they came and said a security deposit was foregone because of a dispute. 5 lakh rupees was debited to P&L account. Can you claim it? Can you claim it? No. So during your net profit statement, you will disallow. You will disallow. Yes, that is what the statement looks like, and this is what your end of the chapter is. We've already discussed the format of total income people. You have income from salaries, income from house property, profits and gains of business or profession, capital, income from other sources. Yes, yes. Now I don't want to start on the next chapter people, the tax rates computation. If you're interested, we can do it off. Otherwise, I just want to ask you some questions on the heads of income. Yes, I'll give you some scenarios. Tell me which head is it taxable for? Which head is it taxable for? More for your understanding people. Yes. Case number 1. I'm coming and saying Rahul is working in a company. Rahul is working in a company. I went and was trying an interview. I was trying an interview. The interviewer came and told me, Rahul, if you're ready to leave your company and join me, I'll pay you 50 lakh rupees upfront as joining bonus. I'll pay you 50 lakh rupees upfront as joining bonus. I said, see, I'm happy to join. There is only one condition. I want this money before even I join the work. Yes, I want this money before even I join the work, which means first you give me the 50 lakhs, then only I will quit my company, because I like this company a lot. Kal ko jaake I quit this company and then suddenly you don't take me up, I'll be in a huge risk. So my request to you is very simple. I will quit the company, you pay me 50 lakhs, only then will I join. Only then will I join. Facts clear? Yes. Now I have received 50 lakhs without even joining the new company. This 50 lakh rupees which Rahul has received is taxable under the head Kyun? There is no employer-employee relationship. People, to tax something under salaries, there are two conditions. Condition number 1, there should be an employer-employee relationship. Payment should be for such relationship. I have not even joined the company. सब मारवाड़ी है, सब हो जाएगा. Imagine हो गया. Taxable under. Taxable under. Taxable under. Taxable under. बोलो रे. Salaries. Taxable under salaries. People, there is a certain amount of difficulty you need to understand. When you say there should be an employer-employee relationship, you don't mean it today. You just said there should be a relationship, which means a future relationship is also valid enough. A future relationship is also valid enough. It does not make a difference. It does not make a difference. Similar example, I have been working in this company. 50 years I worked in the company. Company is extremely proud and happy with me. After I quit, company paid me pension every year. Company paid me pension every year. So from the next year, I'm going to receive pension from the company every single year, even though I'm not working in the company anymore. Even though I'm not working in the company anymore. Pension received by Rahul, taxable under the head. Why? No relationship related to a past relationship becomes fully taxable. Becomes fully taxable. Are we clear? Yes, very good. People, I am running a manufacturing setup. In the manufacturing setup, I had a warehouse. Yes, this warehouse, someone else came to me and came and said, Rahul, you have a lot of space. Why don't you give me a little bit of the space? Give me a little bit of the space. I will be happy to take the space and pay you rent. Rahul has received rent from warehousing charges. Rent from warehousing. Rent from warehouse, basically. I have received rent from warehouse. Taxable under the head. No. How does it matter? Is it going to depend on the answer? If you want, I'll give you answers, but I don't think it's going to depend. Let's assume that it is not fully dependent. It's not my substantial business. My business is to manufacture, basically. Oh, definitely. Warehouse is in my name. Huh? Would it matter? Would it matter? Assuming company. Taxable under. Taxable under. Taxable under. IFHP. Taxable under IFHP. Yes, this is the small mistake which students have been doing, and that's the bigger question which you're going to ask people. This is one thing which I always do very proudly in inter-syllabus. Question is very simple. What do you mean by house property? What do you mean by a house property? When do you see something and say this is a house property? Huh? This is under my name. That is SOP. My question is, how do you look at something and call this as house property? Forget the fact that it's let out or not. ये देख के मेरे को लग रहा है कि ये house है या नहीं. Land or? Very good. People, house property has been defined as an asset which is nothing but a land and building. At no point of time have they come and said someone should live in it. At no point have they come and said someone should live in it, which means a warehouse is a land with a building to it, which means it becomes taxable under HP. Becomes taxable under HP. You cannot take it to IFOS, you cannot take it to PGBP. PGBP is only when you can prove it is for your business operations. Only when you can prove it for your business operations. It's a very ugly thing, people, and unfortunately so. Because when it came to house property, the whole reason why house property was introduced was to tax only houses. But then the whole problem came is, what do you mean by house? Because everyone was trying to fight out to say this is not house. The reason is very simple. When you put something under house, you have to claim only 30% standard deduction. You put it under some other head, you can claim all expenses. So everyone was trying to put something as not a house, which is when the whole conversation started in 1961s and forwards, when they were trying to build a house definition. They started with coming and saying house means where you have 4 walls along with the bathroom, a kitchen, a living room. पता नहीं कुछ की चाहिए उनको. Yes, everyone started making loopholes in it. The moment you said you wanted bathroom, Rajasthan people said मेरा घर नहीं है, because Rajasthani people did not have toilets back in those days. You've seen this movie, no, Akshay Kumar ki. Yes, so those were not houses. The moment they said bedroom, people said हम लोग तो नीचे सोते हैं. We sleep on the floors, therefore there is no bedroom. हम खटिया पे सोते हैं, so therefore this is not a house. Yes, the moment you started coming and saying kitchen चाहिए, PGs came and said I am not doing a house because मेरे में तो kitchen है ही नहीं. मेरे में तो kitchen है ही नहीं. Then the whole question came up is, Rahul, they said, when a place where someone lives, a place where someone lives. Now the problem is when you say lives मतलब कितनी देर के लिए? When you say lives, you need to define a time period. Yes or no? A question is very simple. Rahul is a rich person. Assuming Rahul is a rich person. Rahul is a farmhouse. Rahul has a farmhouse. Farmhouse is somewhere in a different location. Rahul does not go to the farmhouse unless he wants to go for a vacation. Tell me, house, not a house. House, not a house. Living condition aa gaya. Yes or no? Yes. When all those issues started coming up, income tax came up with the most generic definition. Income tax said house means land with the building. And the moment income tax said land with the building, every bloody thing became a house. जो देखो सब घर ही है. Yes, because everything is a house. This building which you are sitting in right now is a house. No doubts about it. It is a house. Rahul, warehouse is a house. Mall गए तो house. Stadium गए तो house. Garden गए तो नहीं. Garden में building कहाँ है? Hey, don't get into the flow, people. Garden is only a land. Does not have a house. Does not have a house. I cannot make it a house. But yes, imagine if I have a garden inside a house. Then it is a house. Then it is a house. Hey, you have gone to the SDIT stadium. House, not a house. House, not a house. House, not a house. House, not a house. 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 SDIT is also a house. It is covered by 4 walls. There is a fence. There is a fence. It is covered by 4 walls. Rahul, roof nahi hai. Chalega. Nowhere has it come and told building needs a roof. It only needs a surrounded area. It only needs a surrounded area. Swimming pool ka place. Building ka niche. Is it a swimming pool, a house? No. But people, you have gone to the swimming classes and all. You go to the swimming classes. That classes is inside a building. That is a house. Agreed, not agreed? Yes. Boat house. Kerala mein. क्यों भाई? Where did I tell you it has to be attached to a land? I said land and or a building. हाँ ठीक है. House, not a house. आपको केरला में whatever you're living is not a house. If you buy a boat house in Kerala, it is exempt. Correct? Correct? Yes, there is a dispute going on in Kerala boat houses. As of now, it is not a house. As of now, it is not a house. People, I'm planning to go to Mount Everest. I have a tent. I've made the tent and I'm living in the tent. House, not a house. My tent it is. Ownership is me. बताओ क्यों भाई? You need a wall made of? Where did it tell that? Bricks? Okay. People, how many of you have been to Japan? Okay, नहीं सुना हुआ है जापान के बारे में. Doraemon movies and all. Yes. Now you've seen Japan. Japan is prone to earthquakes. Japan makes all its houses by using bamboo. क्या चाहिए नहीं चलेगा? क्या नहीं चलेगा? कपड़ा नहीं चलेगा. बाकी कुछ भी चलेगा. Cloth will not be workable. Anything else is workable. नहीं छोड़ो. People, you have seen these movies. Movie shooting चल रही है. Yes, there is this half-made building. There is half-made building. अभी floor ready भी नहीं हुआ है. Under construction building using for movie shootings. House, not a house. House, not a house. House, not a house. House, not a house. Not a house. Where is the building? Half constructed is still not a building. Can you capitalize? You're only capitalizing in work in progress. Can you claim depreciation? It's not a house. It's not a house. People, this is the difference between inter and final. You need to understand things. Yes. Inter में क्या पढ़ा दिख रहा है मेरे को? This is how house property looks like. House property is that ugly to that extent. Yes. Now, I am being very serious about it because it has come in exam so many times. So many times you've got a question in exam which says rent from warehousing charges. And everyone ends up putting it in either PGBP or IFOS. That's a accident area. That's an accident area. Income tax, ICI wants you to put it under HP because you are not in that business. You are not in that business. It's a very, very careful item, people, which you have to keep in mind. When we go to PGBP chapter, I'll reiterate this once again, but please keep this important. Are we clear? Yes. Same logic, people. If I come and tell you that I am running a business, I'm running a business. In that business, I had some extra money. I took this extra money and I gave it in a bank. Bank is giving me interest. Taxable under. Interest received from bank deposits. IFO. Very good. People, same example. Understand what has happened is Rahul has received money from share application. You know what is share application? Yes. Shareholders have given me money. I have not still used the money. I have not allotted the money yet. And Companies Act mandates me saying that whatever share application money you have received, you have to put it in a FD. You have to put it in an FD. So Rahul has taken the share application money, put it in FD. And this FD is now getting Rahul interest. Is getting Rahul now interest. Interest received from money created in FD because law told me to put there. हाँ बोलो 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 CA final हाँ taxable under taxable under taxable under not even taxable not even taxable. This will be reduced from my share issue expenses. This will be reduced from my share issue expenses. They will say, boss, you incurred this interest only for the purpose of issuing your shares. So whatever expenses you made for the shares, net it off with that. Because share issue expenses is a capital expenditure. This is a related income. This is what we call as byproducts. Therefore, will be taxable under nothing. Take it out of my share issue expenses. Neither an income nor an expense. Expense gets capitalized. Income gets ignored. Yeah. That is what is called part SOP and part LOP, no? This is what we call composite income. You split the house into two, and some part of the house is personal income, some part of the house is business income. So to the extent you have let it out, it's not your business operations. That becomes HP. Yes. Similar example, people. What has happened is I was running a client RFP. You know what is RFP? Any idea? Tender. Yes, a client has come to me and asked me for a tender. Now, normally people, clients, when they come to ask me for a tender, they normally have a practice to collect something called bank guarantee. Have you heard about this? Yes. So what has happened is I am going and approaching a client for a business. The client has come and told me, I need authenticity of your liquidity, and therefore you have to create a bank guarantee. Please create a bank guarantee. Give me the proof of it. Then only I will do the RFP for you. Yes. Now, problem what happens, people, is when you have to create a bank guarantee, when you go to the bank will say one simple request. I will only give you this bank guarantee if you deposit money in my account. Yes. So I was forced to deposit money in his account and get a bank guarantee. Obviously, people, when I deposited money, bank will give me. Rahul has now received interest on bank guarantee, which is done only for the purpose of giving, winning a client. Only for the purpose of winning a client. Taxable under. Because. Taxable under PGBP. Taxable under PGBP. People, here my interest was not a side income. It was done purely because business required me to do so, which means it has now become an incidental product to my business operations. Gets taxable under PGBP. Are we clear? Yes. Very good. People, understand this. I am a lottery ticket distributor. My job is to distribute lottery tickets. What has happened is, luckily, when I was distributing lottery tickets, 5 of the lottery tickets I was not able to sell. And this year, when the lottery was released, those lottery tickets won the game, which means I won lottery from my own tickets. So I am a distributor. I have won the lottery for not selling the tickets. Winning money, lottery, Rahul received as a lottery ticket distributor. Taxable under. Very good. Taxable under IFOS. People, my job is to sell tickets. My job is not to win lotteries. This is still my incidental operations. Will be taxable under IFOS. This is not Rahul telling. There is a court decision on this. Final thing, people, is dividends received by a share trader. I am a person who trades in shares. I have received dividend in the current year. Taxable under. Hey, because I laughed, it's not the wrong answer. Taxable under IFOS. Same mistake. I am a share trader. My job is to sell shares. I am making profit from share appreciation. I am not making profits from dividends. Dividends are chillers. The company which gives you dividend is basically doing chiller for you. You would have seen it. They're giving you 100% also gives you 2 rupees. Which means a person is never going to rely on dividend as his bread and butter. Hello? Yes or no? I'm never going to rely on my dividend as my bread and butter. That is always going to be an incidental activity. It's not me telling. Section 56 clarifies it. Section 56 to 1 comes and clarifies saying dividend is always under IFOS, can never be under PGBP or other heads. Can never be under PGBP or other heads. Yes, yes, very good. Amendment of last year. पता नहीं तुम लोगों ने पढ़ा होगा नहीं पढ़ा होगा. People, I am a person who is in the business of letting out properties. My business itself is to let out properties. मतलब whatever rent I get is my bread and butter. Whatever rent I get is my bread and butter. Taxable under HP, taxable under HP. Amendment of last year, case law Chennai properties, until last year people, Chennai properties, case law of High Court, Madras High Court came and confirmed saying that if a person is in the business of letting out house properties, that is his main operations, all should be taxable under PGBP, all should be taxable under PGBP. Nirmala ma'am was not happy. Last year came an amendment comes and clarifies, even if you are in the business of letting out properties, it is taxable under HP. It is taxable under HP with an exception that it is only for residential houses. It is only for residential houses, which means now if you are in the business of letting residential house, it is HP. But if you are in the business of letting out commercial houses, it is PGBP. Which then brings the question, what is? You are already smart. What is a residential house? What is a commercial house then? What is used for business? Used for business as in used for what business? That is your asset, no? That you will claim depreciation. I'm talking about letting out commercial house properties. The other person will use it for business. Correct? Yes, very good. I have some questions, people. Understand this carefully. I have given a house to you. I have given a house to you for living purposes. You are in COVID model, which means you are working from home. You have created a setup at your house, laptop and everything done. You are running everything from house. तुम्हारे पास ऑफिस ही नहीं है, सारा काम घर से हो रहा है. All work is happening at. Tell me, how? This building is commercial or residential? क्यों? Depends upon the what agreement? See, people, I don't know how many of you are realizing this. Traditionally, if you look at this building, if I remove the chairs and everything, this is the house. It is just that we have converted this into a place to take classes. Yes. Now, my question is very simple. How do you decide a house to be residential or commercial? Are you looking at the landlord or are you looking at the tenant? What is that? People, why do you think this house has been converted to a building use? I wanted to declare this as a residential house only, no? Obviously, that is why. Tabhi to I'm using this place, otherwise I would have had to pay extra charges, no? Does that change the fact? I'm running operations only technically here. So here's the question then. Are you looking at something to be residential or commercial based on the owner or based on the tenant? If you're looking at this from a tenant perspective, my question is very simple. I have 4 bedrooms. 2 bedrooms I'm only using for the purpose of office purposes. 2 bedrooms is where I'm basically CF firms. You have seen people, low size CF firms. Yes, front side will be fully for class for your office and back side will be fully for home purposes. Tell me people, will you split your house then? Are you going to split your house commercial and residential? How? 4 bedrooms I understand. Nadula living space, walking area. Yes. Now Thankfully, I don't have an answer because income tax never provided an answer. Yes, one of the most worst amendments introduced last year, because the amendment simply comes and says letting out residential house without even confirming what is a residential house. Income tax has still date not confirmed what is a residential house. No one is ready to accept that it's a residential house. Every person is saying, sir, even if I take a house, one at least operations I will do from there. Every single person has a phone, takes up calls from home. Yes, it's a very common practice in India. After 7 o'clock is the working hours, right? Which means going home and picking up a phone and talking to someone itself is a business activity, which itself means that I've taken this for commercial properties. Have you ever confirmed to me that there is a certain percentage which will make it residential, or there is a certain percentage which will make it commercial? When nothing is confirmed, it is my choice. I'll do whatever I want with it. कौन मना कर लेगा मेरे को? Yes or no? Yes, it's a very, very weird thing, people, which has come up in income tax, and honestly it doesn't make sense if you think about it. Chennai Properties is a company. His 99% of profit is coming from rent. You imagine going to that person and telling him to file a return, where he files a return and he says PGBP 0. Everything is sitting in HP with 30% deduction. Do you think I will like to run a company like that? I would not even like to run a company like that. Yes or no? मैं क्यों ऐसा company run करूं जहां पे मेरे को 70% profit margin हो? People, if I'm running a company, the only reason I'm running it as a company is because I know my profit margins are going to be pathetic. Yes or no? Either if income tax puts something under HP and say 70% is your tax payable income, you think I will be able to run a company? Chennai Properties is now on the verge of liquidation because they said I don't want to run like this anymore. क्या फायदा रखने करके? Yes or no? That is how the ugly thing is going on. And option number 2, Big Fours are now suggesting Chennai Properties don't declare anything as a residential house, start declaring everything as a commercial house. मना कौन कर लेगा? देख लेंगे. We'll see it later on क्या करना है. Yes, that is how fun is going on in India right now, people. इतना मजा आ रहा है पता है इंडिया में ये सब चीजें देख के. क्या चल रहा है पता नहीं चल रहा है. Yes, that is how ugly things are going on right now in India. Are we clear? Yes, yes. Okay, last question. People, I tell you, I am selling a land. I am selling a land taxable under capital gains. Very good. I am selling my office building taxable under HP. Sell कर रहा है रे, not renting. I'm selling my office building taxable under PGBP. People, it's a depreciable asset. The moment you have a depreciable asset, sale value gets reduced from your block. Unless you tell me this is the only asset in the block. Unless you tell me it's the only asset in the block, it will be under PGBP. याद है नहीं है? Yes or no? Yes or no? Yes. Here is where the issue starts. Now you realize what is happening. Yes. Income tax was not as easy as you thought it was in inter. Yes. At the same time, it is not difficult also. It's just about using your head carefully. The moment you start using your head, the better you will get your answers on these kind of questions. Yes. My point is very simple. You're going to have too much of charging sections to understand and clarify before you take up a provision itself. Before even me telling you what is PGBP, I need to first tell you what sits in PGBP. That is where the whole discussion is going to happen. Luckily, I've done it today. Yes, which means I don't have to do this discussion anymore with you. I've already clarified all case laws also, which I have. Yes, so you're just simply going to read these case laws and I start these chapters off along with you in the next classes. Yes, yes. But at least one thing, आज clear हो गया. Many things to learn, lot of things to understand. Yes or no? Yes, let's keep that learning, people. And I told you, I promised you that every day you will have a very good learning. Yes, एक learning ऐसी रहेगी जहाँ पे तुम्हें लगेगा क्या किया जिंदगी में. आज की learning ये थी. Yes, next classes we'll be doing something else. From tomorrow, people, tomorrow Sunday. Yes, perfect. We don't have a class on Sunday. We don't have a class on Sunday. We are not having a class tomorrow. We'll be coming back on Monday. We'll be coming back on Monday and we'll be discussing together. I need an update from everyone. Is October 1st a leave for anyone? No. If there is a no, there is only one class. If it's yes, then we'll have a regular class, an extended class. Only one class? You have offices. Office है तो छोड़ दो, एक को भी है तो भी चलेगा. तो October 1st you have only one class. October 2nd, can you give me a confirmation? People, before next week, please give me a confirmation. If October 2nd is a holiday for everyone, then we'll have an extended class of, yes, only till lunch, not more than that. We'll have a class till lunch and we'll close it with that. I'm not going to keep extended classes. उतना मैं अभी के लिए नहीं करूँगा. We just started. Yes, tomorrow's class, we're going to start with tax rates. We're going to start with tax rates. We're going to learn what is called as tax rate computation. From tomorrow, you're going to be using less of your eyes, more of your And yes, I'm going to give you 101 questions to solve. You're going to keep solving questions until you get comfortable or you broke your hand off. Yes, we're going to do that many questions off till you understand the topics of. I want next topics to be paid too much attention on in the next classes. Yes, तो थोड़ा बहुत अगर इंटर याद है तो अमेजिंग, नहीं तो कोई नहीं, आज के जैसे इंसल्ट कर लेंगे और कुछ नहीं. Yes, I will insult you off like today. पढ़ के आना है तो पढ़ के आ जाओ, चलेगा, देख लेंगे. Yes, please come back in the next class and we discuss about it. Yes, yes. Thank you people. Have a good day. Thank you, Prem.